We also have Rupal Bhansali joining in now, Chief Investment Officer at Double Duty Money Management. Rupal, great to have you with us here on the program. Important day, a big day. Arvind Sanger, of course, is still with us as well. Rupal, you know, the pet peeve for locals here has been, for all of us, has been that foreigners have been big sellers in India. I mean, actually coming into this election last month, that's the month of May, they sold over $3 billion in stocks. And of course, I mean, do you think this changes it if the exit poll numbers, etc., hold? It changes because India is, of course, the fastest growing large economy in the world. And there is this sort of dividend with regards to political continuity. What's your sense, Rupal?
So I think, as you know, I'm a non-consensus investor. So I want to bring to bear something that is not so obvious. You're correct. India is one of the strongest growing economies in the world. And there's a growth scarcity. So obviously that bodes well. But I think the problem with that growth is it's very lopsided. In fact, I would call it one-sided. It's all government expenditure on infrastructure that is driving it, which is good, but it is certainly not supported by many other large components of GDP, you know, like agriculture, very, very weak. Consumer spending, very weak. Even private capital expenditures, very weak. So I think, those are the things that I'm watching out for as to why is this economic activity not broader and so narrow. So while, again, it's very great to see this kind of growth, I think it needs to broaden out for this rally to continue.
All right. Hi, Rupal. Good morning and good to see you in. This is Nigel on this side. What about from the emerging market themes? You know, the Indian markets, they're standing tall, both in terms of returns as well as in valuations. How are you positioned out there? Because the Chinese market actually in the last 3 or 4 months has been a relative outperformer. So that could be tactical in nature. How do you view the emerging markets?
You're correct. I think the Chinese, investment dollars that have flown there are certainly tactical in the sense a lot of fast money has moved in, sensing an opportunity because they've been so weak and they've underperformed for so long. The Chinese premier from time to time does promise a bit of stimulus, etc. It tends to be short-lived. But nonetheless, it has certainly attracted some dollars. I think from an Indian standpoint, if this growth broadens out, I think that will allow the market to continue to prosper. But if it doesn't, I think the valuations will prove to be a very high bar, to cross. And also, don't forget, we need to watch out for, the kind of majority. It's clear, of course, the Modi government is going to come back in power. The question is by what margin and by what majority. And if you look at the Mexican elections, which literally just happened over the weekend, one of those things that, if it's sometimes too much of a good thing can be a bad thing. The Mexican stock market sold off heavily because, people are concerned that with such a wide majority, there'll be no checks and balances of the government. The good news, I think, from Indian standpoint is one of the manifestos of the Modi government was fiscal responsibility and not sort of engaging in populist spending, which many governments are prone to do, and the fear certainly is that in Mexico that they might do that. In India, it's quite the contrary. The government has been far more of a beacon of, I would say, fiscal responsibility, and that's part of the reason why the Indian market has done so well, because people see this Goldilocks period of not only is the government spending so much, but tax receipts are good, the fiscal budget deficit is under control, and that of course has played out in the valuations that you see.
Okay, fair point. Arvind, just to come back to that whole point on what to buy in this market and how to buy it, I want to talk about banks because, look at what happened yesterday. You had that thundering move on State Bank of India, almost 10% higher, right? It's become the second biggest bank by market cap in the country now. So, again, the issue is, do you put money to work where things are good, which is, some of the larger PSU bank names? Or do you go back and wait for something like an HDFC Bank to revive, or maybe Kotak to get through its RBI digital issues and then to revive? The basic question is, put money on what's working, or go and try and find value and then wait for it to turn.
Well, that's a very interesting question. We are always looking for growth at a reasonable price, and so one of the challenges in the Indian market is that the growthier stocks are very expensively priced. And frankly, the PSUs are expensively priced. And, yes, PSUs have performed incredibly well. But, we some of the private sector banks, which have long track record of strong returns, some of which have struggled recently because of, in the HDFC Bank case, the merger creating some short-term imbalance in terms of loan versus deposits. I think those are the kind of opportunities that we think are more value-oriented and yet have a long-term upside. So in a market that is not cheap, we're being much more selective in what we are buying and looking for laggards where we feel there's a long-term sustainability of growth rather than the more frothy, more populist ideas that are out there. And I think you were talking earlier about India versus China. One of the things is India is the best growth story in the world, but India is the most expensive story in the world by a long shot in terms of its own valuation relative to history. It is far ahead of almost every other market in the world that we look at. So I think that's what creates some of the challenge for us when we look globally, is in the Indian market, finding relative and maybe even absolute value is a tricky task, and which is why we have to look under rocks and see where there might be areas that have been overlooked.
All right. Arvind, one theme that you have been spot on has been on the power space and some of those PSUs as well. I recall when you visited India as well, we had a chat with you in our studio, and Coal India was a stock that you liked. The stock has done very well from there. But some part of the street believes maybe if they are successful in moving some of that money towards a renewable theme. As of now, the markets only evaluate on the traditional business, on the conventional business. But they have been making investments in some of these non-conventional businesses as well, which could derive some value. And then, in fact, you could give it a higher multiple. Do you believe that could be the case?
I'm not a fan of coal companies trying to be wind companies or solar companies. I would rather play my wind and solar business directly through wind and solar companies. It's too large a coal business to ever get a renewable multiple. I invest in coal companies around the world, and my advice to all managements is don't try to be what you're not. Try to be the best at what you are. And so, yeah, I'm not a believer either in India or anywhere else in the world thinking of a coal company as suddenly becoming a renewable company.
Power themes, you still like Coal India, Power Grid, if you could name a couple of them?
Yeah, I think, the NTPCs, the Tata Power, Coal India, these are all plays. Look, at the end of the day, India needs all sources of power. And the main challenge in India is not that we don't have enough renewable power at 10 or 11 in the morning or 12 noon. The main problem is we don't have enough power at 6 or 7 in the evening when the sun goes down. And so the opportunity really is more in the thermal sector, and that's not going to change in the next couple of years.
Got it.
This is not a short-term theme. This is the next couple of years theme.
All right. Arvind is with us, and so is Rupal. Arvind, just sort of slightly sort of forward thinking, right? So what has been doing well has been doing well from a market perspective. So the one option is to sort of pile in, and it's kind of hard to do because stocks have done so phenomenally well, outsized gains. The other is to try and think about what could be the next theme, right? So, for example, one of the things which potentially the government could focus on is housing in a big way. We don't know. I mean, I'm just thinking aloud. But the starting point there is that housing finance stocks are actually cheap. That's the starting point. So maybe downside is kind of limited for that space. It's not as if stocks are up 3x, 4x. And then you think about whether the government can focus on, maybe a subvention scheme, subsidizing sort of housing both in urban and rural areas. Of course, we'll find out if that really is the case. But your thoughts, Arvind, on some of this stuff? Go on.
Yeah, I think that's an interesting point. I think, housing finance, there are interesting ways to play it. There are the various NBFCs that have not necessarily participated in this rally. But I think there's the other thing. When you talk about housing, think about cement, think about steel. Infrastructure, we like, some of the beneficiaries of the infrastructure spend. So we think of it both from the financials, where we think there's a lot of opportunities. If India Inc. is going to grow overall, the financial sector, there'll be many areas. But, the natural gas economy, I just mentioned that earlier. So, yes, I don't disagree with your housing comment, and I don't disagree that there are many NBFCs that have been left behind that could be beneficiaries. But I think there are other related sectors, and then there are other sectors that we think that are interesting, where things haven't been quite as bubbly, and there are still opportunities. And we think if we take a 2-3 year view, we are not taking a 1-2 month view. I think there are things that are going to emerge. Some of the recycling companies that are going to benefit from the green economy. I know we talk about wind and solar a lot, but there are other niches in the economy where there are things that could be interesting. So we're looking at some of these niches and seeing that this could be, a sustainable theme over the next few years. And I think the question about the domestic demand remains an open question. We don't have a strong view, but it's something we'll watch to see whether the domestic consumption recovers, because that's important to create a broad-based rally.
All right, Arvind, we will let you go on that note and hope to talk again soon in the coming days, because once the dust settles on this mega event is when sort of the market decides what next to focus on. Thank you very much for being with us on this important morning. Rupal is still with us. Rupal, so, the way things are moving, it's extremely rapid, and this market might have a lot of clarity even as it, sets out for open. So again, what would your advice be, given where we are, given the galloping moves in the last couple of days, including yesterday? What's the best way to sort of, play this from here on, just in terms of deploying money, taking profits, just, a little bit of a tactical advice here, if possible?
That's really hard for me. I tend to be a very long-term investor, but I think it's clear from all your narratives and even the market, this market is looking a bit too rich. And clearly a lot of this election good news was priced in, well before the election results came out. It's been widely predicted, this outcome. Now, of course, there can always be upsets, but it's clear there's not going to be one today. So I think a lot of the good news is in the price. I think in general, worldwide, this is not just true of India. We have gorged on capital appreciation as being the form of, returns in the market. And people have forgotten that in long run history of markets, dividends have typically contributed almost half the total returns when you look at it over, a couple of centuries perspective. And I think dividends are going to be the way to generate total returns in the market, because capital appreciation is likely to disappoint. So that's kind of how I'd position my portfolios, with companies that can pay. Now, of course, that's not exciting. It's not sort of very fast money, but I think slow and steady sometimes can be the best way to win.